What if you could retire without ever worrying about the stock market crashing, your savings running out, or the constant stress of budgeting every penny? What if your retirement income grew steadily, even while you slept, without selling off a single investment or relying on guesswork? Imagine a strategy so quiet, so steady, and so powerful that it builds wealth for you automatically, month after month, year after year, all while requiring little more than your patience. No day trading, no market timing, no financial degrees. Just a simple system used by the world's most consistent investors to create unstoppable momentum. This isn't fantasy. It's the magic of DRIP investing, or dividend reinvestment plans. These humble, often overlooked financial tools are the secret behind many successful retirements. They turn small, consistent investments into powerful income machines. The best part, anyone can use them. You don't need a six-figure salary or an early start. All it takes is a strategy, a bit of time, and a willingness to let compounding work its quiet miracle. In this article, we'll explore exactly how DRIP strategies can make your retirement not only possible, but easy. From how they work, to why they fit perfectly with your retirement goals, to real-life success stories and a step-by-step blueprint you can follow starting today. This is your ultimate guide to building a stress-free, income-rich retirement through the smartest strategy most people overlook. Welcome to WealthEchelon, your go-to spot for smart investing, in-depth ETF insights, and book reviews that help you build wealth. On this channel, we explore everything from the best investment strategies to the latest trends in ETFs, and provide valuable takeaways from books that can transform your financial journey. Whether you're a beginner or an experienced investor, our goal is to give you the knowledge you need to make informed decisions and grow your wealth. If you're ready to elevate your financial game, hit that subscribe button and don't forget to turn on the bell for updates on all our latest content. The foundation of wealth accumulation. Dividend reinvestment plans, or DRIPs, have quietly become one of the most powerful tools for long-term wealth creation, especially when targeting an easy retirement. At its core, a DRIP allows investors to automatically reinvest the cash dividends earned from stocks back into additional shares of the same company, often without paying any commissions or fees. This process creates a compounding effect that steadily grows an investor's holdings over time. Rather than receiving small dividend checks that might get spent or forgotten, DRIPs keep those earnings working within your portfolio. This reinvestment mechanism can significantly increase your number of shares and your total returns, without you needing to contribute more cash out of pocket. DRIPs are particularly valuable for patient investors. Over time, small amounts reinvested every quarter can translate into large gains as both the share price and dividend payouts increase. This is because not only are you accumulating more shares through reinvestment, but your total dividend payout grows proportionally, accelerating your compounding rate. For instance, owning a company like Johnson & Johnson or Procter & Gamble in a DRIP account for 20 or 30 years could lead to several times more shares than you initially purchased, generating a much larger passive income stream. This low-maintenance strategy is perfect for investors who want to build wealth passively over decades and ultimately transition into a stress-free retirement phase. Another advantage of DRIPs is the discipline they encourage. Market volatility often spooks investors into rash decisions, buying high or selling low. But when you've enrolled in a DRIP, the process becomes automatic. Your dollar cost averaging into the stock regardless of market fluctuations, which reduces the emotional impact of market highs and lows. Over time, this disciplined and consistent reinvestment approach helps investors smooth out the cost basis of their shares and improve long-term returns. DRIPs reward consistency, patience, and long-term thinking, the very principles that align with a peaceful retirement. Why DRIP investing aligns perfectly with retirement goals. Many retirement planning strategies focus on lump sums, how much you need saved up by retirement age. But the beauty of DRIP strategies is that they shift the emphasis from just saving to growing a perpetual income engine. When you invest in high-quality dividend-paying stocks through DRIPs, you're essentially building your own pension fund, one that grows with time and pays you for life. The more shares you accumulate, the higher your future dividend income becomes, potentially replacing or supplementing other retirement income sources such as Social Security or 401k withdrawals. DRIP investing is particularly appealing because it transitions seamlessly from the accumulation phase to the income phase. During your working years, you reinvest all dividends to grow your share count and compound returns. As you approach retirement, you can simply turn off the DRIP and begin receiving those dividends as cash payments instead. It's a smooth and natural switch from reinvesting to harvesting, which makes retirement planning easier and less stressful. You won't need to sell your stocks or worry about market timing. You'll be living off the income your portfolio generates naturally. Another reason DRIPs work so well for retirement planning is the type of companies often involved. Most DRIP-eligible stocks are issued by blue-chip, financially stable firms that have long histories of paying and increasing dividends. These include companies like Coca-Cola, PepsiCo, McDonald's, and utility firms. These stocks tend to be less volatile, more defensive, and offer reliability in turbulent markets, qualities that are essential for retirees looking to preserve capital while still generating income. Furthermore, DRIPs offer an accessible entry point for young investors who may not have large sums of money. You can begin building a future income stream with relatively modest investments. Thanks to fractional share reinvestment, every dividend, no matter how small, is put back to work. Over decades, these reinvestments can result in a significant nest egg that provides dependable income in retirement. Ultimately, DRIP strategies offer a sustainable, low-risk pathway to financial independence, perfectly suited for anyone looking to enjoy a secure and easy retirement. The psychology of passive income and financial peace. One of the underrated benefits of DRIP investing is the psychological comfort it offers. Knowing that your investments are automatically working for you can reduce financial stress and decision fatigue. Many people enter retirement with uncertainty about how much they can safely withdraw from their savings without running out of money. But with a DRIP-built portfolio, this anxiety diminishes. You're not reliant on depleting your principal or timing the market. You're relying on the continuous flow of dividends, which are often more predictable than stock prices. There's also an emotional benefit to watching your portfolio grow organically. Seeing dividends arrive and immediately reinvest, buying new shares every quarter, creates a sense of momentum and progress. It feels like your money is constantly at work, building something valuable for the future. This automatic reinforcement of financial success cultivates a long-term mindset, making it easier to stay invested during market downturns or periods of uncertainty. That long-term consistency is a major advantage in retirement planning. Moreover, DRIP investing fosters a lifestyle of delayed gratification and disciplined accumulation. While others may be chasing quick gains through speculative trades or cryptocurrencies, DRIP investors quietly accumulate wealth in the background. This strategy isn't flashy, but it's proven. It keeps you grounded, focused on fundamentals, and aligned with the slow but steady approach that ultimately wins in the marathon of retirement planning. And let's not overlook the psychological power of income independence. Retirees who rely solely on savings may live with constant worry. How long will the money last? But those with a DRIP-funded dividend stream experience peace of mind, knowing that income will continue regardless of market swings. It's the freedom to enjoy life without stressing over every expense. This is what makes DRIP strategies not just financially smart, but emotionally liberating as well. They provide the kind of retirement most people dream about: steady, predictable, and worry-free. Creating your DRIP retirement blueprint. To build a successful DRIP strategy for retirement, start with identifying the right types of stocks. Focus on companies with strong dividend histories, consistent earnings, and a commitment to shareholder returns. Look for dividend aristocrats, companies that have increased their dividends for at least 25 consecutive years. These firms offer not only dividend consistency, but also the potential for capital appreciation over the long term. Popular examples include Johnson & Johnson, 3M, and Colgate-Palmolive. Next, ensure your brokerage supports DRIP enrollment. Many modern brokers offer automatic reinvestment features at no cost. Some traditional DRIP programs are company-sponsored and allow direct purchase of shares, sometimes at a discount and with no commissions. These can be especially helpful for smaller investors just starting out. Either route can work, but the key is to make reinvestment automatic and consistent. Then decide how much you can invest regularly. Even small amounts can lead to meaningful growth over decades, thanks to the power of compounding. Consider setting up recurring investments paired with DRIP enrollment to dollar cost average your way into solid dividend-paying stocks. This will help remove the emotion from investing decisions and ensure that you continue building your portfolio even during downturns. As your portfolio grows, regularly evaluate your holdings. Are the companies still paying reliable dividends? Have they maintained or increased payouts? Is their financial health intact? While DRIPs are low maintenance, periodic check-ins ensure your investments remain aligned with your goals. You should also diversify your holdings across sectors to reduce risk. A well-rounded DRIP portfolio might include healthcare, consumer staples, utilities, and dividend ETFs for broader exposure. Finally, develop a retirement transition plan. As you near retirement, consider slowing down reinvestment and redirecting dividends into a cash account. This allows you to live off the income without selling shares. The beauty of this approach is its simplicity. No need for complex withdrawal strategies or big lifestyle adjustments. You'll have a passive income machine already in place, and that machine can fund your retirement for decades. The power of DRIP strategies becomes most evident when looking at real-life examples. Consider a middle-income worker who begins investing $200 a month into a diversified DRIP portfolio in their early 30s. They focus on dividend-growing companies and consistently reinvest all dividends for 30 years. By the time they reach their 60s, they could easily be sitting on a six-figure portfolio, throwing off several $1,000s a year in passive income, without ever having invested more than $70,000 out of pocket. And if they never touch the principal, that income could last indefinitely, growing each year with inflation. Another inspiring case is that of retirees who live solely on DRIP-generated dividends. By choosing safe, low-volatility stocks and reinvesting for decades, they've built portfolios that provide $30,000 or more annually in dividends. For them, retirement isn't about budgeting withdrawals from a 401k or worrying about market crashes. It's about collecting checks from businesses they've owned for decades. That's the kind of security most people crave. DRIP investing is also a great equalizer. You don't need to be wealthy to start. There are no complicated entry points or hidden fees. Anyone can begin with a few dollars and build over time. It's about patience, not perfection. With consistent contributions and reinvestment, even modest earners can retire comfortably. In conclusion, DRIP strategies offer an elegant solution to the complex problem of retirement planning. They simplify wealth building, remove emotional barriers, and create a growing source of passive income. DRIPs reward discipline and long-term thinking, which are far more powerful than chasing fads or market timing. If your goal is to retire easily, with minimal stress, reliable income, and the freedom to enjoy life, then DRIP investing is one of the best paths to take. It's not just a financial strategy, it's a philosophy of building wealth slowly and steadily, brick by brick, dividend by dividend. Thank you for watching Wealth Echelon. We hope you found valuable insights that will help you on your investing journey. If you enjoyed the video, make sure to hit the like button, subscribe, and turn on the notification bell so you never miss an update. Keep building your wealth, and we'll see you in the next video. Don't forget to check out our other videos for more investing tips, ETF strategies, and book reviews to continue growing your financial knowledge.